Now we're going to look at step 3 in the closing process where we close the income summary account. So remember, from step 1 we place the amount of revenue into the income summary account, and then from step 2 we place the amounts of our total expenses into the income summary account. So at this point the amount in our income summary is going to be the difference between our total revenues and our total expenses. And since our total revenue from the first step was $5,200 and total expenses was $3,000, the balance in this account is now the difference. The balance is now $2,200, and it represents a net income because revenues are greater than expenses. So what we must do now is take the money out, take the dollar amount out of income summary and put it into our capital account. Now, since we had a net income, we will increase our capital account with a credit and debit the income summary account. If it were the opposite, if we had a net loss, we would decrease or debit capital and then credit the income summary account. So this step is important in paying attention to whether you have a net income or a net loss. But since because we have a net income, which is what we hope for, we're going to, on the last day of the accounting period, December 31st, we are going to debit our income summary account in the amount of $2,200, which is the difference here, and we are going to credit our capital account in the amount of $2,200. So that's all for step 3. So after step 3, summary from all 3 steps: revenues are closed, expenses are closed, and our income summary account is closed, and our capital account has been increased, which represents the amount for our net income.